The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m. And then, of course, followed by Steve Rhodes, Dave White, Tom O'Brien. So let's look at this market. Dow's up 54, smashed yesterday, 230-something points to the downside. Now we're up 52. I'm going to go through the scenario. I think I'll go through a little slowly. Someone asked, well, a number of people have asked me, I guess with my South African accent, which I haven't lost after all these years here in the United States. You know, it's interesting because the moment I landed here, people would say, oh, what a nice accent. What an interesting accent. Not that they could understand anything. It was just a very different accent at the time. But if I had gone to England or to London, where that was the original plan before I decided now I'm going to further my studies here in the United States from South Africa, the moment you arrive in London, you're affected. The South African accent is looked on like a real country bumpkin. Because everybody speaks so well, and South Africa was part of the Commonwealth, but it was really like a bastard language, Afrikaans, very interesting. So never had any reason other than to say aluminum instead of aluminium and bathroom instead of bathroom, things like that, because when you have kids, you just have to kind of go with it. So I'll talk a little slow. This is a really important moment for a couple of reasons. If you look at this E-mini, it kind of capsulizes a lot of what we're looking at. I'll just use it for the moment because most of you, majority of you probably don't do anything with the futures, but I'm just using the futures, well, trade the futures, but I'm also using the futures as a benchmark. So here we are. Left side daily, middle is the weekly, and in this particular instance, I always show the E-mini 120-minute chart instead of the monthly because the monthly chart doesn't show all that well. It would if I had the continuous contract because it would have all that time period going back. Look what happened. We made a peak E in the E-mini at 2488.50 on the 8th of August. Let me just show you something here. If I can do this. Oh, did I actually set it up? Yes, I did. And let's see if I've still got it, because I've had so many charts that there's a chance I might have lost it. Nope, there it is. So there's an easy concept in the Chapman wave methodology. Find the lowest low bar and merely count each successively higher peak. And here you can see from the trough, from the lowest obvious low bar, you're counting each peak, and it's alphabetically notated, uppercase letters all the way up to a G. But the fourth highest peak, peak D, is where other things can happen. On the way down, it's a little different. But on the way up, absolutely. Now, this is going to be very interesting. So you see fourth highest peak. You can get an instant restart, Chapman wave instant restart. You can recycle to the upside. You can, if there's an instant restart, you can actually go to another. It's a fantastic technique because if you can identify a very quick move from D to a leg, E/A, then B, F/B, then what's happening is that there's a chance you could even go to another D or even an E. Very often the second buy mode after a Chapman wave instant restart is really very strong. Okay. But then there's the cup formation and the arch formation that I always talk about. In the weekly chart, you can see we made a peak F. So D, E, and F is where you've got to be really careful. Other things can happen. And at E, in the daily, we fell from 2488 down to the 2419 area, rebounded to 2479, and now we're trading at 2461. But the 2488.50 was, at this point, I'm still calling it a peak F, Chapman wave 5, another technique that I've developed in the daily. And the technicals are very weak, and it seems to me that we have upside limitations. That's really what I wanted to show you. And I have someone in the den, a really good Chapman wave technician, who says E-mini is in A, B, C. Yeah, you know what? I don't have that. I went through these very carefully. Look, the peak that was made right here at 5, that's 5 o'clock on the 5th of September. That was yesterday, I guess. At 2460.75, then at 2460.50 at 8 o'clock. So that's the way that works. So that's a peak A. Oh, man. You are very good. You always pick these things out and you identify for me exactly correctly. B, good eye. I guess that's what happens. Your students, when your students become the teachers, that's really good. Yeah. And it stopped right at the downtrend resistance line, the 120-minute chart, went to a B. Very good. He's always correct when he corrects me. So ESU is trading up $1.50 at 24.61, trying to hug that 9-period exponential moving average in the daily. Weekly chart, same thing. 24.57 is the 9-period moving average in the daily. 24.50 is the 9-period moving average in the weekly. And the 120-minute chart is at 24.61 or 2. Right on 61.75. So this is a very critical moment, and I'll explain why in the bigger context. Look, INDU, the Dow, which we started a short position in yesterday, made a high in the 8th of August at 22,175 and has been making consistently lower lows and lower highs, except for this brief little sojourn up into the 22,038 area, and gave it back yesterday. Now it's under the 9-period moving average. Where I said to subscribers of my opening call is that this 9-period moving average should become resistance, 21,851. Market opened at 21,815 and went to a high of 8,490. Sorry, 21,849. Just under that 9-period moving average. So now here's the issue. The issue is that the weekly chart is still above the 9-period moving average. So I said the weekly chart went from a sell mode back to a sell signal because of that bounce on Friday. But the technicals really indicate that this is a sell mode. But technically, I want to be thorough in my technique. And my technique says that unless there's a decisive close below the 9-period moving average, preferably at least two lower closes below the 9-period exponential moving average in a weekly chart under the 9-period moving average is really important. Unless that happens, you haven't really got the signal. And this is just showing internal strength on price, not internal strength on technicals, but on price. And price is the arbiter of the trend, surely. And that's the way it is. So a close below 21, I've said it closed below 21,670 in the weekly chart starts to indicate weakness, but you really need to see a close below 21,600 for the daily to really give a fabulous signal for the downside, and for the weekly to give a sell mode signal. Monthly chart is still very strong up right.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So yesterday I had, just as the show was finishing, I had a question from Warren. It was more a kind of a statement question type thing, a very good observation. It was a great observation. And Warren had asked about the Fed. Is the Fed developing this kind of cash? They are expelling cash. He didn't quite say it that way, which is probably one of the reasons why you get these the buy programs. And then there was another statement that was had to do more with the wash that was created through bonds. That the wash, it was more like a tidal wave that could in fact bring the market down at moments as the Fed is doing adjustments. So this is the fundamental part of it. I've thought about it. I really don't want to make up something, and I really don't want to go into another area that I have to investigate for something that I really don't know about. I'd be speculating even more than I would normally be as looking at it fundamentally, because it has a technical aspect to it. I'm just going to say I'm going to keep it there on the back burner as a good question. I'll ask some people who probably could give really a good answer, but I'm not going to be able to answer that. That was number one. Number two is I had a couple of emails from people that have been using the Chapman Wave methodology in their own way, using it the way I've taught, etc., and have really been they're really enjoying it. Basically, they've said, as Tim had said, Basil, I love the wave. I'm finally able to see the wave everywhere. And it's funny, whenever you see a chart, if Larry shows a chart, if Tom, whoever shows the chart, there's never a time where I don't just count the waves. And of course, that fourth wave is where you got to be careful. And I know you did a couple of classes last month. And so you asked a couple of questions about that. So yeah, so please send me your questions on the Chapman Wave. If you have a question, I love answering them. It's always a challenge for me. I'm going to talk about something real quickly. I'm going to go to the other aspects, but I had a question about OIH. Actually, Julie wanted to know about OSX, but I'm going to the OIH, which is the Market Vectors Oil Services ETF. You see this move that started very slowly, and now it's building up pressure, and it's trading at 23.52, up 41 cents today. Look at the MACD, the way it crossed positive. Look at the histogram as it's positive. Look at the way it's above the 9-period moving average. Look at the way the stochastic is running nicely to 72%. Look at the way that the on-balance volume is starting to rally. It's at about 30 right now. That's a good sign. So I like that. Hey, wait a minute. You remember that down channel? I said that years ago, and I do mean years ago, when I used to get charts delivered from in the old days. I can't remember. There was different companies used to send out books with charts, and you'd look at them over the weekend. Well, what was really interesting is that there was a chart that went up, and it was like a little worm in a tunnel, and it just kept going higher and higher. And the tunnel was very narrow, and it kept going higher and higher and higher. And then eventually, when it broke down, it was I believe it was Merck or Pfizer. It was way back, maybe in the 80s. And I thought that is a fantastic pattern, because you never know when to buy, because it keeps looking like it's in a pullback, but it stays like it's walking the limb of a tree or a branch or a twig, and it just keeps going up, and it's got the solid footing until it gets to the edge of the leaf, and whoop, comes down. Well, we've got the exact opposite. So this move here, where you've got a move down in the OIH all the way from January of this year, around about the 35s, to the low that was made just recently in the 2170 area 4 weeks ago, and retested again 3 weeks ago, and then tested again in 21s last week. Good breakout, gap to the upside. This is going to be a very significant move if the OIH is able in the next 2 weeks to have just the briefest pullback. It really has to be an intra-week pullback, because by the end of the week it must still be a green candle, and it closes above the high of the week of the 21st of July, above 26.38. That's 3 points higher. It's 10% higher. That would be a really good breakout, and that would really help the monthly chart, which has a 9-period exponential moving average resistance at 26.05. So I wanted to mention that, because the question was on the OSX. Is it OSX or do I have to put in dollar OSX? No, it's dollar OSX, the same sort of thing. Here we go. Dollar OSX. Yeah, same thing. Leg B. And here's that down channel. It's the same thing. I like the OIH because I'm more familiar with. Over the years, I look at OIH more than the OSX, but I look at them both. Okay, hope that helps. So the next thing was the question about the NYA. So let's do this as we're looking at these different indices. This is a very important moment, because I think that we've made some kind of a top, August the 8th top in the Dow. The S&P, I think, is not as strong. I think that there was a false breakout to the upside in the Qs on Friday. To test it, we actually went long. One of the sectors that did very well, we had a position, a very tight stop, 1.1 or something, 1.2% stop. We got stopped out. I didn't like being stopped out, but I like the fact that it's telling me that it's something to keep an eye on. It hasn't broken down yet, because it is now just within pennies of where we actually bought it. I just had a really tight stop. I wasn't prepared to mess around. So as long as we see this rotational aspect, hey, let me look at the SMHs. They were a little weaker. Now they're up 33 cents. They haven't broken down yet. I think this is a peak D rather than a brand new B at 89.37. But that weekly chart says don't get too carried away on the short side of some of these indexes just yet, because there is still, even though the technicals are very weak, it's holding above the 9-period moving average. The weekly chart, it was pennies away from going to 89.73 on Friday. It went to 89.37. What was that? What was 15 cents, 25 cents away? 15 cents. No, 35 cents away from 36 cents away from making a leg D in the monthly chart. That's incredible. So at this point, you've got to think of it as the rotation is still keeping the upside going, but that rotation is also saying that if you look at, let's go on, in the QQQ series, It's up 7 cents. The technicals are kind of okay in the daily. The weekly technicals are very weak, and yet the price went higher. But it has got that pattern that we call that Chapman wave stalk leg formation. I might have to rename this. All I can say is this: if the Dow makes a new all-time high in the next week and a half to 2 weeks, the Qs continue higher, the SMHs continue higher, I have to rename the weekly chart, not a D, but a brand new leg B if it happens this week. That would be amazing action. I'm just trying to be prepared, and I'm trying to say to you, be careful in the rotational aspect of this market. You've got things that are happening here that are very unusual. So don't get too carried away shorting unless you're really sure, and I would still have fairly tight stops or buy stops in the short positions. We haven't got the major signal that I'm looking for in the weekly yet. I'll be right back. Basil Chapman, Tiger Technician Tower, Dow's up 59.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, let's go to Mike in Ormond Beach. Sorry, Mike, I almost forgot about you. I was so busy looking at the charts here. Mike, what can I look at for you?
Okay, Basil, I heard you briefly talking about the technicals of the Chapman wave system in the beginning of the show, and I'd just like to tell you there's something that I seem to always have trouble with, and maybe if there's a simple way you could tell me, what I have trouble with is after we go to peak D.
Correct, yes.
Peak after that, I sometimes I get confused if it's an E or if it's a new A. And if there's some simple way that you can put out there to really clarify that, but that's the biggest thing I have problems with Chapman wave.
So what I'm going to ask you to do is find me some examples. If you can remember what the examples were,
Okay.
find me some, and we'll go through it together. For instance, if you look at the monthly chart of the Dow right now, let me open this up and make it nice and big because we want to be able to see it in Tiger TV. There you are. You'll see that in the monthly chart of the Dow, in March of this year, the high was 21,169. And you recollect that we went for, I think it was a full 2 months. We went from April, May, and then suddenly in June, there was a break to the upside. And that fits the pattern that says there's a peak D, and even though it's a monthly chart, we're looking at the potential for a Chapman wave instant restart. It had those 3 bars that were very, very close together, and on the third bar, it broke above. So technically, I should be putting here an E/A because it was so strong. The MACD was strong. Stochastic is very strong. However, I have other techniques, and the other techniques suggest that because of the doji candle of last month, that like a plus sign,
Yes.
this is a very critical month because if there is a close below the low of last month, 21,600, that's why I'm making such a big deal about this 21,600, I'm going to have to say, we could go down and even test the 9-period moving average of 21,062. If there is a close above, then all of a sudden I'm looking at this and I'm saying, you know what? The MACD is still very strong. Stochastic is very strong. There is a chance in this particular formation that we don't have an instant restart. We go to a G, and then you've got to be really careful. So there's still an F to come.
Right.
And that would mean that if there's a new high, the F cannot even begin to be thought of until the whole of October is complete, because if September's a high, you have to wait for the next low high. That's a month, so that'll be October. And if October is just a gentle pullback, even if it's to 21,000, that's gentle in terms of this huge move we've had. And then there's another high. I have to consider that that's a peak F and is probably going to a leg G. That takes me into the early part of next year. But it's to put together with other things. Now, to make it really simple, I've chosen this because of that little instant restart. What is an issue, and I'll try to find some, and I'll talk to maybe as the week progresses, I'll try to get to some and we can talk about it. But send me an example. You don't have to actually notate it. Just say the whatever it is daily chart between August and September, and then I'll know what to look for. But I've got tons and tons of these examples. But I have, in fact, let me just do this because I believe let me see, is the SMH an alternate count? No, the IBB might be an alternate count. IBB, yeah. Yes, okay. So the IBB weekly chart, that's the NASDAQ Biotech ETF, has a peak D at, is that the one right there? Yeah, at 323.45 the week of the 23rd of June, pulls back, and then goes to a peak E, which I thought was a Chapman wave 5 for a sharp pullback, which it was. There was a pullback, but the rally that we had last week took it to a new high. So now this is the exact question. Basically, this is kind of what you're asking, and I'm looking at it and I'm saying, wow, is this F/A? And I'm saying, IBB in a brand new A, that means it's going to go to B, C, and D over the coming. I'm ruling that out. I could be wrong, but I'm ruling it out because it just doesn't make any sense whatsoever. However, I've also got it as a D. Why? Because if I go back to the double top peak C1, C2 back in March of this year in the weekly chart, there was a sharp pullback. It was like one of those lightning bolts, A to B equals C to D. And then it ran up, But that means that I could have taken this little high right here on the 9th, the week of the 9th of June as peak A, the high that I thought was a D, and it could be a B. That was on the 23rd of June. And then the one I thought was an E, that could be on the 28th. That could be a C, and this makes it a D. To me, this makes the most sense that we've just made a leg D, and there's a chance of a peak D. That means that I have to renotate, and the objective in the Chapman wave is not to say, oh my God, I was wrong. And it's to say, hey, where are we right now? Whatever happened before is history. Where are we? Because you want to know what the last letter is so that you know whether to be ready to short or to take off some or to add. That's the whole object. So I've got this now, and my leaning is that I've got this as a peak B in the daily. It should be really an F/B. Here comes the test, but the MACD is strong at 95. I mean, the MACD is very strong. The stochastics at 95%. The reason, actually, this is the one that we took a long position in this morning, and we got stopped out for 80 cents on the 2 times long ETF. Was 1.2% or something. But you can see why it held so beautifully. So there are times where you just have to let it play out. And my rule of thumb is when I give these courses, I say, sometimes you just have to wait for the next peak or trough, because that's going to most probably clarify. So I'm looking at this, and the reason why I'm saying I would be careful about overshorting unless you got all your signals right, because some of the sectors are still holding quite well, IBB being one of them. And you can see even now it's up $1. The IBB is up at 334.13. MACD is good. I still like it. I'm sorry I made the stop too tight. I just didn't want to have risk at this particular point. We've got some longs that are still doing fabulously. I don't want to, give away things, profits like that. So, yeah, I kept it tight. But you can see this is an exact example of maybe an alternate count. But at this point, it still looks like a B, even though I technically should put in F/B. So sometimes that's, you can't find a technique that does every single thing. I've got a technique that tries to do as much as possible, all under the aegis, under the umbrella of the Chapman wave techniques. So what I would say to you is, if the MACD and stochastic are still very strong and you've gotten to a D, think that the next high is going to be E/B. That's the rule I tend to use, and it's a rule that's held pretty well. I hope that helps you a little bit.
Yeah. Are there certain numerical parameters to define whether it's strong in your opinion or not?
The MACD and stochastic are the ones. Yes. Hold on, and I'll finish up that thought as soon as we get back. Okay.
Great.
We'll be back. Now's at 50.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. We're just wrapping up with Mike and Ormond Beach. So, Mike, I'm just going to say to you that I'll do quite a bit more work. Maybe I'll have a subscriber or something like that, a webinar just talking about this very issue, or maybe just a course that I give, because I've had this question. I have the question myself. I've resolved it to a certain extent in my own way, but it's a really good question, and it's just one of those things that if you had to try to do it on a computer, it would just, you'd have so many if this and if that you wouldn't be able to. I say that if the strength is still there in price, treat it favorably, and as soon as it breaks down and goes under the 9-period moving average, and it goes under the 9-period moving average very seriously after a peak E or an F, consider that that's done. That's really the best way I can answer it is by price movement, but to project out, it's absolutely a certainty that if the MACD and stochastic are really strong, the stochastic's in the 92% and the MACD is very strong, it's at least giving you tremendous support. I would still put a lot of emphasis on the 9-period moving average. Closing below it says, starting to weaken in price. So I think that'll help you. But I haven't had time. It's been on my mind for a while. There are 2 particular patterns that people keep asking me about. And I hope I find time, and I'll try to set something up, because it's a great question, and it'll force me to be even more diligent in trying to find a simple answer that you can say, got it. But I do have a simple answer. If there is if the MACD is very strong and it goes quickly from D to a new E, consider that you might only get to a G and then it collapses. It won't go to another ABCD. Use the MACD's fast moving average, the green differential, the green line that I use right there. That's going to help you. But I'll talk about it as we move on. Hey, good call, good questions.
Thank you, Basil. You do so much for us. Appreciate it.
Thank you very much. Thank you. That was Mike in Ormond Beach. So now let's go to a couple of things. I was asked about SQM. I know that I notated this. I don't know what happened to it. Sociedad Química something or other. Minera, ADS. It looks fantastic. A, B, C, D, leg E in the monthly chart. Brand new. I'm going to give it an alternate count just for now. I can't do it so quickly. So I'm just going to say it really looks good. And yes, if you got out of it, peaky, you got out a little early, but only because it's already gone up if you're already out. I'm thinking that it is getting really close to a consolidation. It's at 48.63, up 63 cents. SQM, Chilean lithium. Oh, Chilean lithium. So then it's on its own power generation, huh? All right. So what we're looking at, just make it real simple. If you want to get back in, I just have patience. And the only way I can look at it is say this big candle of the 24th of August, lows 42.62, highs 46.60. If there's any pullback in the next week and a half and it closes under $46, that's really what you want to see. Have patience. Give yourself 2 to 3 weeks, and then I would be looking to get back in. I'd start a position. In your case, I would start a position in the 45s, and I would add another position in the low 43s, and then we'll have to assess to see how it's doing. But it really looks good. And if you don't get it, the only way that I can say to you is nibble right here at 48.65. I know that you like to have a position because you follow it better, but you do realize that I think it's getting real close to some kind of a consolidation. 51 looks like very strong resistance. That's 2.5 points away. But I think that it's more likely to pull back 2 to 3 points than to hold any gain of more than a point in the next day or two. Hey, I don't know. That's the way it's looking. All right. Next question I had was, can strength in the QQQ override? Hey, this is a good question because this is kind of what I was talking about before. Why I said be very selective in your shorting, because this rotational strength, as long as the rotational strength keeps buoyant, stocks that really should be pulling back. Let's just have a look at NVIDIA, NVDA. NVIDIA trading at 166.67, made that peak E on the 8th of August at 174.56. And I said I've got no other way to count this but to call it a peak B in the weekly, but I've got a leg F in the monthly, and at this point I don't feel any necessity to change it to an alternate count. So it could in fact be an instant restart F/B. I just see no need. Why? Because I think it's in a consolidation phase. So sometimes the actual pattern itself tells me more and gives me the kind of outlook that says, you know what, would I short one of the strongest graphic processing workstation game mobile device NVIDIA? Would I think I would definitely do that on the next bounce, but there are other ones that are better. But do I think it's coming down? Yes. Do I think it's actually a short? No. If it's a quick trade, yes. Why? Because of this very strong candle. This is the opposite of what we were looking at a moment ago. Let me just get rid of the Fibonacci extension here. Sometimes messy charts upset me. Yeah, I'm thinking that if NVIDIA at any point in the next 2 weeks closes under 161, it's just going to be a real quick test to 152.91, the low that was made the week of August the 11th. This is the pattern that I'm looking at, regardless of whether this is a B. This can be a B, peak B, and go all the way to 125 and still go to C and a D in the weekly chart. So I'm not going to hang my hat on that. What I am going to hang my hat on is this particular pattern right here. The arch formation says very clearly that if NVIDIA breaks above, closes above, can't just break, it's got to close above 171.90, the high of the 1st of September, there's a real good chance it's going to make a leg C in the weekly chart. If in fact it closes under 161, so that's 4 points down, but only, what did I say? 171? Oh, 5 points down. All right. So it's 5 points up, 5 points down is absolutely critical over the next week and a half for NVIDIA. A close below 161 says, yeah, be careful. It's in this consolidation. I was still not very short until it took out that low of 152.91. Then I'd say, you know what? It's going to test the 140, 139 area right there, the low of the week of the 7th of July. So when stocks are in the middle of a move, it's very difficult sometimes unless you've got your pattern. My pattern says it's been forming the arch formation. This is another confirmation. That's probably the active chart formation, and then it should be making lower lows and lower highs. That's the way I'm keeping it. Totally wrong at 172. 170. Totally wrong at 172. Make it simple. All right. So now that's that, and I want to, TL, I didn't even finish everything I want to do. TLT, making a doji candle today. This is in the Chapman Wave Inside Track, another technique I've developed over the years, that says this is your resistance. This is the repellent zone. This is where you've got to be a little bit careful, because unless the price decisively breaks above it and closes above it, every time it's been in this area, it's been repelled, and it's doing it right now. We're looking at it. But the MACD is very good. Stochastics showing that there's weakness internally. So the TLT 20-year iShare Treasury Bond ETF. If this closes, I got another segment. Good. I want to finish up on the TLT and I want to finish up on gold and the dollar because these are very important. And as we're going out, I'm going to do this. I didn't show it once. Let's see if I can do that. This is the ESU 17 chart. Oh, and I didn't show the commodity index. Look at this ABC, a little ABC, peak A, peak B, peak C, and the 10-minute chart trying to round it. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yes, stay tuned for Steve Rhodes. I'm so not used to yet my new time of 12 to 1 that I always forget. Steve's straight after. Okay, so let's do this. Dow's up 64. I had a couple of questions, but let me show you. The TLT in leg D, 129 round number high. Now, that's a little tough because the root is the bonds. It's a high round number. But look, I'll just make it real simple. I think there's a chance that we are on the cusp of some turn in some of these key indices. Let me show you. TLT, leg C in the weekly chart, very nice. Leg C in the monthly chart, very nice. But until I get a strong leg C going into the 130 to 131 area, this is just that nominal new high. So this is just the moment where you could see, at least shorter term, some kind of a pullback. And my contention has been that when the market really pulls back sharply, we will see the VIX index rise into the teens regularly, and that the bonds will keep going higher. But bonds look a little tired right now based on the TLT, based on the TNX. That is the 10-year Treasury note. Look, making a little doji here, getting close to some, at least an attempt for a bounce. So this is what I'm thinking. The dollar hasn't broken down. Shouldn't have said that, right? Down 20 cents. The dollar, we had the UUP, we took a 1% loss or something. I just experimented in a long position for the first time in I don't know how long in the dollar. I thought, let's see what happens. Well, it depends on gold. Gold is in leg D and maybe making a peak D right in that same resistance zone. The GDX, leg D, possibly a peak D today. So I'm just looking at this and I'm saying, hey, there could be some kind of an inflection point here where the prices either break out, that's the TLT, the gold, etc., or there's a deflection where you start to get a break to the downside, even if it's just short term. So I'm watching that really closely. That's number one. Number two is I wanted to show you just a couple of things as we're about to wrap up here. Race, which is Ferrari, leg D. It's in the same kind of zone. It's getting a little quite extended, in fact. That's the break. I want you to look at the TRCCI. We'll do that tomorrow. We'll do a little more on that. And that is the commodity index is doing really nicely on a short-term basis. Look, it looks leg C in the weekly. I'll be back. Stay tuned for Steve Rhodes. I'll be back tomorrow, and have a great day. And ask the questions. Send them. I'll look at this.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.